From Bitcoin surging past the $30,000 mark for the first time in a year, to Tesla refusing to budge with its Bitcoin holdings, here's everything you need to know about the potential resurgence of crypto. First up, we should talk about the most eye-popping event of the year so far. Bitcoin finally managed to rise above 30 grand. Crypto winter has been a bitter affair, and it didn't seem like there was much hope on the horizon. But after starting the year in the sub-$16,000 mark, Bitcoin has seen a steady rise. Things really started to heat up on the 12th of April, which is when the dollar value of Bitcoin finally surpassed 30,000 once again. This gave investors a lot of hope, with many stating that this is signaling the start of another bull run. But what's really going on here? To understand that, it's important to look at what brought us to this point. 2022 was a rough year for crypto. It all started when the Fed started raising interest rates. The post-pandemic economy was experiencing a real squeeze. There was too much cash in circulation, so consumer spending began to go haywire. Combine this with massive global supply chain disruptions, and you have the perfect storm for record-breaking inflation. Raising interest rates is a common tactic for the central government trying to rein inflation in. It makes it harder for consumers to spend on credit, forcing them to rely a lot more on cash, leading to reduced spending. The goal here is to cool down the economy, and while that may work, it also means that liquidity starts to dry up. With interest rates reaching multi-decade highs, investors were compelled to pull out of their crypto bets. This created a bit of a domino effect. When so many investors liquidate their assets all at once, the market floods and prices begin to crash. Mind you, there are no buyers for these assets during economic downturns. So with such a massive supply and barely any demand, a crypto winter was inevitable. The big guns who'd bought crypto outright could suffer a loss, but the overly leveraged investors who'd accrued debt weren't so lucky. As the margin calls started coming in, leveraged buyers began to join the liquidation rush, further worsening the price crash. Eventually, the value of Bitcoin and most other crypto tokens plummeted by 55%. Of course, this was just the tip of the iceberg. Record high interest rates would have been bad enough, but the crypto world also dealt with some of its biggest players crashing and burning. First, there was the notorious Luna crash of July 2022. And of course, its supposed stablecoin cousin, Terra USD. Stablecoins are meant to be backed by real assets, but Do Kwon was trying something different with Terra USD. This stablecoin's value was managed by an algorithm that was linked to the native token of the Terra blockchain, Luna. With unsustainable annual yields of 20% on offer, it was only a matter of time before things came crashing down. Luna and Terra USD lost virtually all of its value, and $60 billion in the crypto investor space vanished. To make matters worse, crypto's would-be savior, Sam Bankman-Fried, landed in hot water. His company, FTX, suffered a liquidity crunch like no one had ever seen, mostly because of how terribly mismanaged and corrupt the firm was. FTX, which was once valued in the tens of billions of dollars, went bankrupt overnight, and just like that, faith in the crypto space began to disappear. What followed was the worst crypto winter in recent memory, one that's still ongoing. You might think that the uptick in Bitcoin's value is a great sign, but don't get your hopes up just yet. For one thing, Bitcoin couldn't hold its 30K value for long. While the gradual upward movement in its price created some momentum, the cryptocurrency quickly dipped below 30K shortly after crossing the threshold. Traders with bearish sentiments had secured short positions on the crypto, and as the price went up, short positions started to liquidate. Bulls began to notice this and started buying the token up, which created the momentum that pushed Bitcoin over the 30K mark. But a sudden massive sale by a single trader, coupled with inflation levels in the UK reaching as high as 10%, made this a short-lived victory. This isn't the only thing that's leaving crypto investors skeptical either. The EU just passed a new regulatory framework for crypto exchanges. In an almost unanimous decision with around 95% voting in favor, the EU Parliament has now passed the Markets in Crypto Act. It's left investors wary about what this act could entail if it gets passed into law next year. Daily stablecoins transactions will now be capped at 200 million euros, and crypto firms will be legally obligated to reveal the environmental impact of their digital tokens and assets. The main issue here is that regulation tends to dry up the investor pool. Crypto needs broad participation for a true bull run, so government intervention that alienates investors could be a real obstacle. And it's not just the EU that's cracking down on crypto. The Commodity Futures Trading Commission, also known as the CFTC, is also taking Binance to court. The world's largest crypto exchange has become a popular platform for first-time investors, expanding access to the asset class to traders who may not have any other point of entry. Binance isn't technically registered to provide US customers with trading services, which is why the CFTC is cracking down on the company. To top it all off, Coinbase is coming under fire as well. The Securities and Exchange Commission noted some potential legal violations by the exchange. All of this is pointing to a very hostile landscape for crypto, which isn't something you'd want to hear if you're looking to invest. However, it's not all bad news. A lot of these crackdowns are creating positive changes in the industry, like increased transparency and minimum reserve requirements, to name a few. Crypto exchanges run the risk of sudden, widespread withdrawals, just like regular banks, so they'll now have to maintain a minimum level of liquidity to facilitate these withdrawals. That can do a lot to boost investor confidence. And an increase in transparency certainly won't hurt either. Crypto banks like Silvergate Capital, SVB, and Signature Bank recently failed due to bank runs, so investors needed some support before they could get back in on the action. While increased governmental oversight may make some traders nervous, it may prove to be a silver lining in the long run, facilitating a more stable and consistent investing environment. It's important to zoom out a bit and watch the markets with a bird's eye view, because this can reveal some truly positive trends. For example, Bitcoin's still up by around $11,000 since the start of the year, going from around $16,500 in January to a little over $28,200 on the 20th of April. But it seems like the turmoil in the banking industry is ironically doing crypto some good. Top analysts are noting how resilient Bitcoin has been in the wake of bank collapses, and the 9% uptick in March is a clear sign of that. We should also note that Ether's enjoying a real moment in the sun. Firstly, the tokens narrowly avoided getting classified as a security, at least for the time being. SEC Chief Gary Gensler was vague when the question was raised, so it doesn't look like the dreaded security label will come anytime soon. Also, thanks to the recent Shanghai fork, Ether holders can now withdraw staked crypto. This has led to the value of staked Ether surpassing that of withdrawals for the first time since its inception. It wouldn't surprise me if Ether gets a flood of new investors, since easy access to your staked funds really sweetens the deal. There's one thing that might signal an upcoming crypto rise. Major holders like Tesla have been pretty quiet. It's now been 3 straight quarters of no activity from Tesla, whether that be buying or selling. That suggests that the company's adopting a long-term strategy as far as Bitcoin is concerned, which can give struggling investors the confidence they need to keep hodling on for dear life. If there's one thing we can learn from all of this chaos, it's that the crypto space is continuing to evolve. Day-to-day price changes aren't as relevant as long-term averages, and the movement this year has been surprisingly positive. Will crypto return to the dizzying heights of 2021? The truth is, no one really knows. But there are some signs of the crypto winter winding down. So, from Tesla refusing to budge with its Bitcoin holdings, to Bitcoin surging past the $30,000 mark for the first time in a year, this was everything you needed to know about the state of crypto.